Hey everybody, it's Nick Inman, founder of VolumeProfileTrader.com on Thursday, November 15th, and here we are again, looking at what the market's trying to do, and then looking at the fiscal cliff and the overhang that has on the market. So I think it pretty much comes down to one thing. You need to watch the US dollar, the S&P 500, and the volatility index. From there, I think everything else is secondary, and that's just how I feel. Now, you can go from the S&P 500, and you can also look at the Dow. You can look at the NASDAQ 100. That's fine. There's nothing wrong with that. But some type of broad index, and you'll be okay. So I'm just going to use the S&P 500 in this video, and we're looking at levels. So basically, in the U.S. dollar, we are looking for resistance. Is the U.S. dollar going to find resistance where it once was support? And you can see 1, 2, 3, 4 times, and then it broke down. We came down to test this huge high volume area where we basically formed a higher low / double bottom, and basically a snapback back towards this resistance area. So what you're looking for is, okay, are the sellers going to sell this dollar down? And if so, will the market rally? And I think that's yet to be proven. And I'm looking at the intraday volume, and so far it does not make a compelling case. There we go. It does not make, on a 1 hour dollar chart, it does not make a compelling case for something that wants to go lower. Now, I can look at levels, and you can see here on the dollar, high volume area, clearly resistance, or a level of what should be resistance. But as long as this thing holds these lower levels, so let's call it 81, then the dollar is okay to the long side. One thing to say is there was some good selling in the dollar today. So that's a positive, and that shows you that there's some type of stabilization maybe coming in the market. Now, whether it's short-lived or not, and yes, it should be, you know, it remains to be seen, but at least we're seeing something, right? So going back on the daily chart of the dollar, you see your levels, 81.40 or so on the upside, and then on the downside, 81. If we stay in that range, I think you kind of leave it as is. If we start to break 81, then maybe you look for an upside bounce in the S&P 500 in the broad market. If you see a dollar that breaks above, call it 81.40, 81.50, and continues its drift higher, then obviously you're probably going to see the market continue to drift lower. So let's go to the S&P and see what's going on. And what you see here is a market that continues to break down and really just be affected by what's going on by the fiscal cliff. So basically, we're coming down to now the bottom of this big high volume area. So originally, we were looking at the point of control to hold. It held for about 3 or 4 days. Let me zoom in so we can see. It held for 3 or 4 days, where then it broke down, and it broke down on not great volume, but heavier than more than average volume. And the last 2 days, we've seen a follow through to the downside. The last day, and now we're in Globex here. So what I'd be looking for is, you know, like on the U.S. dollar, are we going to hold the bottom end of this range? If you're looking at the S&P 500 on a 1 hour chart on the monthlies, I'm looking at this point of control back in July. And what we're seeing here is it was amazing support. We bought that support. We bought the breakout here. We bought the pullback here, and it was a great opportunity in the market. Now we're retesting those levels. Well, guess what? We also have a gap down towards 1334, let's call it, and we need to be paying attention to that. If I switch this, I'm just going to zoom out a little more so we can see it. A 2 hour, 180-day chart. You can see it a little better. And you can actually move this down if you want. However you want to draw it, that's fine. But regardless, the gap remains the same, 1330 or so. And let's see if we have a gap any lower. No, well, other than 1285, but we'll get to that, you know, when and if we get to 1334. But right here, right now, you know what? I'm going to say that the market's holding these levels. Now, it just goes on with the thesis. Okay, we're getting not great, seriously not great, but decent volume coming in at this support level, which should hold. And so far it has. Only one hourly bar closed below that 1 hour point of, or that monthly point of control. The other two closed above. So that's positive, and we can say that. But continue. Let's look at this dollar here, and you can see on a 2 hour chart where the volume is. So just keep it in mind. Let's go now to the volatility index. So back to the daily chart, the volatility index, and what do we see? We're back up at the top end of the range, right? We can clearly see that 1620 or so is resistant, or excuse me, is support, and 19 down to around 18.5 is resistance. Where do you want to be a seller of volatility? Between 18.5 and 19. Where do you want to be a buyer? Anywhere under 16.5. Let's look at, nope. All right, here we are, hourly chart. Actually, it's a 2 hour chart, so I can zoom in one. All right, and we see the 50% retracements all in this zone from 2 months ago, or I should say the last 3 months. Where has price come to retest and bounced right at those levels? So you see, clearly we have resistance up around 18.5. Clearly we have support at 16.5. Where are we? We're at the top of this range. Now, that doesn't mean that we can't go higher. The market, you know, at the end of the day, we're in this trading range on the VIX, and it's going to break one way or the other. And until the fiscal cliff has any type of resolution, I do think that you have a chance to see this volatility index going towards 20.5. And if that's the case, then obviously you don't want to be a buyer of this of the S&P. You're going to want to look to see that gap down towards 1334 fill, and that's just kind of how it's going. However, if we do see more of the same, which is the VIX selling off from that 18.5 range, then maybe you get an opportunity here on the S&P for a 15-20 point bounce. A move up towards 1380 or so, which is the current point of control for the month. That would be nice, but maybe a little bit ambitious. That's just kind of the market we're in right now. And I guess it wouldn't be appropriate until we show a chart of Apple, right? So Apple continues to break down. Let me get the right tool. Let me move this down to the bottom of this high volume area. And what we're seeing is Apple, which is basically coming down to a double bottom here. It's coming to a point where, is it ever going to bounce? It's going to, I promise you. It may not happen tomorrow. It may not happen the following day, but you're going to get a bounce in Apple. It's going to be meaningful. It's just not happening right now. You look at what's going on here, and I mean, literally, any type of rally is something to be sold into. Now, eventually that's going to end, but until we break, some of these trend lines, there's nothing to get too excited about. If I zoom in a bit to an hourly chart, what we saw here was a breakdown from the current month point of control. It formed down at these levels. What happens? We break down from those levels and we continue to make new lows. Zooming out some, we're back at these lows here, so it's just something to be aware of. I really, as much as I want to be a buyer, and I have to be very straightforward, I nibbled on Apple today. It's about 1/10 of a position size. It's nothing to even worry about, but I'm trying to get involved on a name that, if you look at forward earnings from a fundamental standpoint, I mean, this is this is incredible value, and it's something to be aware of. Now, I also realize that zooming out 5 years, you have a ton of profits in this name. I totally get that, which is why I'm basically playing off of these lows here. If it drops below that, fine. I'll take the loss. I'll move on. That's why I bought 1/10 of a position size and not, a third or a fourth. It's because I want to be involved, but I don't want to lose a lot of money. I'm okay with buying a little bit at these levels, but knowing that I'm not going to, let's say it turns around, I'm not going to make a ton of money, but it's easier to add to the position. And what I'm eventually looking for is some type of snapback back towards 575 or so. And that's just kind of what I'm looking for. So a few other names that I kind of want to bring up, because I've talked about them in, for example, in StockTwits, which I recommend following me on both Stock Twits and Twitter. If you like what I'm talking about, if you like my opinion, whatever, it gives you a little more insight to what I'm thinking. So just throwing it out there. But for example, Valero, VLO, the ticker symbol, continue to watch this. It continues to trend sideways, but this is something that hasn't broken down like the rest of the market. So just keep that in mind. Similarly, Target announced earnings. They killed it. They're doing what they need to be doing. Let's see, Starbucks doing what they need to be doing. Let this come in. You obviously see the gap here, but give it an opportunity and then take a hold of it. Qualcomm, similar situation. These are names that at least have the fundamentals behind them. And then, of course, let me talk about this. Gold and silver. This is completely a dollar story. Let me zoom out a little bit. What we see is more of the same. The dollar, or excuse me, gold is doing what it's doing. It's trying to break out. It's trading sideways. It's looking for some type of resolution. We're at the point of control for the year, and it's important to realize that we are failing a little bit from these levels, and realize that we do have a lower high forming right now. So with that said, I think that you need to remain a little bit cautious. As bullish as I got over the last few days, we saw no immediate follow through, basically saying the 50-day moving average was in fact resistance. And with that being the case, you live with that. Now, with that said, I think we continue to say 1700 is your line in the sand, and from there you look down to the 200-day and these recent swing lows. So from a short standpoint, that would be a target, and that's if and only if the dollar continues to rally. So remember, on that dollar index, what was it, 81.50? 81.40, 81.50, those are your levels to watch. Yes, we're at resistance on the dollar, but that doesn't necessarily mean that the dollar has to go lower. So anyways, I hope this helps. I hope it gives you an insight to what I'm kind of looking at on the market. One more thing, the NASDAQ futures, right here at the value area low for the year. Let me give you an example of a value area low for the year trade. Deer, value area low. It came down all the way to the value area low for the year, and what did it do? It provided for great opportunity. I'm not necessarily saying that that's going to be the case with the NASDAQ, but just keep an eye on it. Look at something like Cisco. This is something that beat, and it was a good trade to the short side. I personally didn't get a bunch of it, but it is what it is, and you're seeing some type of reversal. The point is they beat, they outperformed, and that's what you want. Similarly, IBM, it's coming to a level where, in my opinion, if Warren Buffett's buying these levels, I think I want to be buying these levels from a fundamental standpoint. I'm not saying I'm doing it, but I'm looking for it. So anyways, take care, have a wonderful evening, and I'll talk to you next time.